Hi, this is Doug Goldstein from Profile Investment Services here in Jerusalem. Although I mostly spend my time helping people who live in Israel handle their U.S. investment accounts, I like to put together these 4-minute money episodes to teach one financial planning idea. I hope you get a great takeaway. If you have any specific questions about the takeaway or what I'm teaching, or really anything to do with your U.S. investment accounts, feel free to get in touch with me. You can check out my website at profile-financial.com. Hope you find this 4-minute money episode valuable. Hi, my name is Doug Goldstein. You know how sometimes people refer to the stock market as a casino? Well, today we're going to talk about gambling versus investing. Where are you more likely to win? In real life, by the way, I am an investment advisor. I'm based in Jerusalem. I help people handle their U.S. investment accounts. And I should share with you that I am on the side of the argument that says that investing is not the same as gambling. Peter Lynch has a great quote. He was one of the greatest investors ever in history. He said, "If you don't study any companies, you have the same success buying stocks as you do in a poker game if you bet without looking at your cards." Well, can you make more money gambling in a casino or investing in the stock market? Both investors and gamblers make decisions on where to place their money based on the likelihood of certain events happening. The probability of high gambling returns is low. In fact, the slot machine is the ultimate game of chance, as its returns are random. You have no control over whether a row of bananas or cherries will appear. The odds of getting a winning combination are the same as being hit by a comet, 1 in 1.6 million, I'm told. When you invest in the stock market, you have slightly more control over the outcome since you get to pick the stocks. While you can't predict the future, you can look at a company's fundamentals, evaluate how its directors make decisions, and decide whether you think it has a winning model. While past performance isn't a guarantee of future results, past earnings can give you a sense of how a company may react in different market scenarios. If you invest in a stock with reliable earnings and revenue growth, you increase your odds of success. Across the risk spectrum of investments, you can choose to gamble on uncertain outcomes, those are high risk, or invest in more certain outcomes, which are lower risk. So why do some investors choose to gamble? Theoretically, investors are paid higher returns in exchange for accepting higher risk, but the odds of succeeding are lower. Consider the retirement scenario of the gambler who invested in a .com stock with no revenues or earnings. Most .com stocks failed. This is the risk of betting without looking at your cards. To establish a risk level that reflects your ideal level of safety, listen to my podcast where I discuss risk and safety levels. You can go to goldsteinongelt.com/low-risk. Again, that's www.goldsteinongelt.com/low-risk. I have a guest on the show, and don't forget the opinions expressed on the Goldstein on Gelt show are those of the guest, and not necessarily my opinion or the opinion of Portfolio Resources Group. If you have any questions or comments about what you heard today, please feel free to get in touch with me. My email address is doug@profile-financial.com, and make sure before you do any investing, check out our complete disclaimer at www.profile-financial.com/disclaimer.